Hello everyone, I'm Ever and I'm going to explain to you how to solve the problem from chapter 788. So first of all, you first need to read a little bit about you need to read the chapter if you want to understand what we're doing here. So the first thing here is that we are going to prepare monthly cash budgets. Uh, You need to go to here, link to text here in your WileyPlus, and it will redirect you straight to this page. And then you can see here reporting cash equivalents. You scroll down all the way to here to define cash budgeting. Then you are going to find here the basic cash budgeting. So it is like for years or for 1 month only. So we scroll a little bit more and we find here that it is a cash budget for 4 quarters. So this is the one I read and I try to comprehend it, and that's how I solved the problem. It is not that hard from what we did in previous exercises. We just need to know what we are subtracting and adding, and it is going to be easy. So first thing, we're going to start here. Prepare a cash budget for January and February, so it is 2 months. Do not leave any answer field blank. Enter 0 for amounts. Okay. So the first thing, we need to put the title, so it is for the 2 months ending February 28, 2017. So the first thing here is beginning cash balance. As you can see here, beginning cash balance, and even here beginning cash balance. So you'll see that I'm not making things up. I'm just following here the rules from this cash budget. So we put a beginning cash balance and we read over here. The company's cash balance on January 1st, 2017 is expected to be 47,600. The company wants to maintain a minimum cash balance of 51,430. Okay, so first thing here, this is only for January, so we're going to put the beginning cash balance for January is 47,600. So we type it in here. And we'll leave this one alone. You're going to see what happens. Well, I'm going to explain it a little bit later. So then we put add. Then we are going to add cash receipts, as you can see here. Then this one, I don't know if it has to be in order, but I just follow the instructions here. So collection from customers, sale of securities, and then it is supposed to have total receipts. So here we have collections from customers, sale of securities, and then you might see over here that I added notes receivable. Well, how did I find out that we needed to add notes receivable? Well, you're going to read over here on other data, and you can see collections from customers. So you have it over here, collection for customers. For January is 329,700, and for February is 378,900. Okay. Sale of securities. We're going to see here that payments, we are not doing this yet, so we are going to the third one, other receipts. January collection of December 31st, 2016, notes receivable. So we know that we need to pay. Well, we're going to receive some money from notes receivable, so it is 18,900. So we're going to put it over here. Remember, we are adding, so this is something we are receiving. So notes receivable is something we are adding up. And then February proceeds from sale of securities, 5,100. Okay, so we put it over here. And then other disbursements, well, this is another thing. So now we can put our total receipts. The one thing we're doing is we're adding up this one plus this one, then plus this one. So as you can see here, the answer is 348,600, and then we add this one with this one. Okay, so we add the total receipts and the beginning cash balance, and it should be this one over here. Then we proceed to put less cash disbursements. As you can see over here, less cash disbursements. Then again, I just follow the rules here, or just whatever they had here. Inventory, salary, selling, and administrative expenses, excluding depreciation. I'm going to explain this. Okay, purchase of truck, income tax expense, and total disbursements. So here we have salaries, and then we go all the way over here to read without salaries. As you can see, we have salaries here. So we just have 83,800, 81,700. So we put it over here. They have administrative expenses. This one, we have administrative expenses 71,800 and 74,900. But as you can see over here, it says that you need to exclude depreciation. And if you read over here, remember administrative expenses, and then you have to read over here. All sales and purchases are on account. Budgeted collections and disbursement data are given below. All other expenses are paid in the month incurred except for administrative expenses, which include 1,400 of depreciation per month. So since we are not including it, the depreciation expense, we're going to subtract this 1,400. We subtracted 71,800 minus 1,400, and it is going to give us 70,400 in salaries. I mean in administrative expenses. So here you have 70,400. We do the same for the administrative expenses for February. So they are 74,900, and we subtract 1,400, and the answer is this one, 73,500. Okay. So the other one is selling expenses. We see over here that it is selling expenses, and it is the same amount here, then it is, and I just put it over here. Here. Then we have purchases. We check for purchases, and we have over here the payments for purchases were 108,800, and in February were 143,200. That was one question I had when I was making this up. So why do we put this one instead of this one? Well, since we see over here that it is purchase of truck, this is and this is cash disbursements. This is something we are spending on, so it is supposed to be payments we made for that. And as you can see over here, these are just the purchases we made over the months, and these are the payments. So these are the ones that we need to put over here to register. This one's not. So now we have purchases. Then you might ask why I have dividends here, since it is supposed to end in purchase and then income tax. But as you can read over here, we have that. Where's that dividends? Other disbursements, February 12,700 cash dividends. So we added here in disbursements. We put dividends, okay, and it is only for February. So in January you put it 0 over here. We did the same here for sale of securities and notes receivable. Then you're just going to add all of this up. Salaries plus administrative expenses, selling expenses, purchases, plus dividends. And the total is total disbursements. Okay, you're going to, we can do it here in February. Sorry, I forgot that we can do it here as well. Just add this up, and it is total disbursements. So the next thing we got to do is we have to get the difference between total available cash and total disbursements. So we subtract 396,200 minus 341,700, and it is going to give us an excess deficiency of available cash over disbursements. It is 54,500. And then here is the financing, borrowings, repayments, and ending cash balance. Yeah, we are going to watch a video. I don't know if you watched it yet, where we are asking for borrowings, or you might ask, why did I? Well, why in January 0 and why in February 0? So in February is 10,000. It is because, as I said before, I follow the instructions here, and as you can see, it says that the quarters, the first one, you don't have any borrowings. It is you can read over here, and it is going to tell you that the first quarter you don't have any kind of borrowings, because you're going to have borrowings the next month or somewhere between if the instructions tell you to. So we put it here in 0, 0, and then we just put this number 54,500 into ending cash balance. Then this ending cash balance from January, we are going to put it over here in February. So we're going to do the same. So we're going to add up total receipts plus beginning cash balance, and it's going to give us total available cash. Then we're going to subtract total available cash from February, which is 438,500, minus total disbursements from February, which is 397,200, and the excess or deficiency is 41,300. So in this one, since this is the last month, we're going to compare. So you might ask, why do we have here 10,130? Well, now we go to the problem again. Ending cash balance, it is supposed to be 51,430. Over here in the instructions, it tells us the company cash balance in January is expected to be 47,600. The company wants to maintain a minimum cash balance of 51,430. So this is the one we put at the end of, well, in this case it is February, so it is the ending cash balance of February, since we want to maintain it. Well, the company wants to maintain a minimum cash balance of this quantity over here. So we put over here and we just take the difference, and this is going to be borrowings. So it is 51,430 minus 41,300, and that equals 10,130. Repayments, they are 0 because we need to have the information over here, somewhere over here. So we don't have anything, so we just put the 0 over there. So if you have any question, you can ask me. If you have trouble understanding, you can ask me as well, and I'll be glad to help. So see you soon. Thanks.